house not only provides a roof over the head but also saves taxes. If you buy a house by taking a home loan, then there is a deduction of up to 2 lakh rupees on loan interest and also a deduction under ATC on the principal. Not only this, the income earned from selling an asset can also be used to save tax by buying another house. So how does a house help in saving taxes? Let's find out in this video. A large population in the country invests in shares, mutual funds, gold or property. Tax has to be paid on the income earned from such investments. That's well known. Now, if a new house is purchased from the profit earned by selling a residential properties, that is a house in this case, then tax exemption is available under Section 54 of the Income Tax Act. Apart from this, at the same time, buying a new house with the money received by selling commercial property including shares, mutual funds, gold, land, etc. gives tax exemption under Section 54F. Now, there are certain conditions to claim tax exemption under Section 54. Let's take a look at them. First, income from selling property should be a long-term capital gain or an LTCG. The second is to get a tax exemption, the house will have to be purchased with the entire amount received from the sale and not just the profit alone. So, is the profit made from selling a property a long-term capital gain or not? Well, that will depend on the holding period, which is for how long the property has been held and sold. Now, the LTCG criteria will vary for different properties. For example, if a share or an equity mutual fund is sold after say 12 months of purchase, it is treated as a long-term capital asset. Now, and the profit arising from it is considered as a long-term capital gain. There is 10% tax on such income. Now, similarly, for LTCG, gold has to be kept for 36 months. For property and unlisted shares, this limit is 24 months. Long-term capital gains tax on gold, property and unlisted shares is 20%. For example, if you invest say 30,000 rupees every month in an equity mutual fund through SIP, then with an expected annual return of 12%, you will have around 70 lakh rupees after 10 years. In 10 years, you deposited 36 lakh rupees and there will be a profit of 33 lakh 70,000 rupees on it, that is the capital gain. Now, long-term capital gain tax at the rate of 10% will have to be paid on this income, which will be 3.36 lakh rupees approximately. Under Section 54F, you can save tax of 3.36 lakh rupees by buying a new house. To buy or build a new house, not just a profit, but the entire money, that is around 70 lakh rupees, will have to be used. So please do note that. Now, to get tax exemption, a new house will have to be purchased within 2 years from the date of transfer of the old asset, that is the sale of the mutual fund unit. In case of construction, the house should be completed within 3 years. If you buy a new house even a year before selling the old asset, you can avail of the discount. To avail tax exemption under Section 54F, it is important to keep certain things in mind. At the time of selling the asset, you should not have more than one residential property, that is the house. If you have one house, you can buy another house to avail the benefits of this section. The house for which you have taken Section 54F exemption cannot be sold within 3 years of purchasing it, or otherwise, the exemption will expire and you will have to pay tax. If you want to buy a house under Section 54F and are not able to utilize the capital gains till the date of filing income tax returns, then that money will have to be deposited in the bank under the capital gains account scheme, which is CGAS, failing which tax will have to be paid by you. Not only this, despite keeping money in this account, you will have to buy a residential property within 2 years or get it constructed within 3 years. Otherwise, you will have to pay long-term capital gains tax. Through Section 54F, you can buy a house with capital gains and save lakhs of rupees in tax. In fact, the government wants you to buy a house by giving tax exemption, but there are some restrictions to ensure that it is not misused. From the financial year 2023-24, under Section 54F, only long-term capital gains tax up to 10 crore rupees can be saved by buying a house. You may have to pay tax on profits above this limit.